So interesting. So activist, I wonder, I haven't checked Google Trends, but activist investing, there's a lot of stories. Carl Icahn, I just got a notification from my phone and I was like, how perfect is this? I screenshotted this that Carl Icahn's stock dropped more than 15% after a regulatory filing revealed the U.S. Attorney's Office for the Southern District of New York contacted the company seeking information about corporate governance and materials. John, your name now immediately pops up.
Thank you very much.
That's incredible, right?
It is. It's fantastic.
Yeah. So what a wonderful thing to be able to author a book on a contemporary topic. So we're really excited. Hello, welcome to our attendees are starting to come in. Hi, everybody. Hope you're having a great day. Thanks for joining us. Love to know where everybody's from. John, I am in King of Prussia today, King of Prussia, Pennsylvania.
I'm in Monroe Township, New Jersey.
Mm-hmm.
Here in the office.
Yeah, so everybody could feel free to put it in the chat. Let us know where you're from. Okay, hey. Thank you. Yes, it is going to be. We got Dallas. Shout out to Dallas. New York City. Oh, New Jersey. We've got a stupid taxes. That's why I moved to PA from New Jersey.
That's probably why you moved to PA. You used to be in Jersey.
I know. Yeah. So PA found new construction and locked in actually good rate before all of this Fed stuff started to happen. So I was really lucky. And the taxes were better here and mom's closer.
That's
and
important.
I know that, yeah, it is really important. So great. So really excited to see everybody here. We're going to just allow a few more minutes for everybody to get in here. Thanks so much for joining us. You guys are in for an awesome treat. An awesome treat. You know, one of the great things about this book club, John, is that sitting down with authors like you, we all learn something.
I hope so. That's why I wrote the book. So I really hope people take something away from it and really pick up some new skills or some new ideas.
Yeah, so it's really inspiring. So while everybody's kind of getting in, let me read the wonderful housekeeping items here. So we're so happy and honored that you joined us. Thank you for attending Intentionally and Friends Book Club launch with our special guest, John O'Connell, author of The Rise of the Activist Investor, available on Amazon and all other book outlets. Definitely get your copy. Before I introduce John, I'm going to start with just a few general introductions and housekeeping items. I'm Tina Powell, Chief Growth Officer here at Intentionally, and I am joined by some of our fearless leaders here, supported by Intentionally co-founder and president Megan Richter and our colleague Melanie Herrera Bridges. So we're here if you're having any technical support, any issues, please let us know in the chat. And a big shout out to our CEO and Intentionally co-founder, Kelly Watrick, who conceived of this book club idea and let us run with it. You can visit our website at Intentionally to subscribe and get the latest updates on all our upcoming meetings and guests. We have got such a full plate. I love doing this. I could just, every month we've got something new. It's so exciting. So if you have any questions, comments, let us know. Again, in the questions, that's where you direct. If you see on your Zoom and you look at the Q&A, that's the best place for the questions. Also, the book club meeting is being recorded. It's available to everyone that registered. And if you're an author and would like to recommend an author, would like more information on Intentionally's book club programming, please send it to bookclub@growintentionally.com. And lastly, we appreciate the courteousness of your time and attention. Understand that this is educational in nature. Of course, we would want you to consult with your financial advisor for any advice that's specific to your financial circumstances. So let me kick it off with that. Fantastic. Everyone meet John O'Connell. John has more than 30 years of experience as a senior executive entrepreneur and consultant. John, you've held various positions at Oracle, Merrill Lynch, KPMG. Today, you are the founder of the Oasis Group, a company that helps financial services companies and fintechs increase their revenue, connect with their target audiences, and position their products and services for growth. And I would like to put a drum roll here because just this week, who knew, John, you were announced to the board of advisors for Wealth Tech Strategy Partners, a new investment bank focused on wealth tech. John, congratulations. Welcome.
Thank you very much, Tina. I really appreciate you having me on.
So let's talk about your book, Rise of the Activist Investor, your handbook on leading sustainable corporate change as an individual, keyword there, individual activist investor. You're going to help us to demystify the activist investing process, demonstrating that it's not only reserved for the rich and influential, but for all of us here. So let's kind of have you kick us off and talk about what's your definition of an activist investor? How should we think about it today in modern terms?
So I invented an activist investing arc in the book. So I think activist investing, if you think in the past, it was primarily some of the bigger names like Carl Icahn, or even more recently, Ryan Cohen, right? With what's going on with GameStop and several other companies that he's invested in. And in the past, these activist investors would create their own little hedge funds, or they would create an activist investing investment company, and then they would drive corporate change and be able to do that by investing in companies to a certain percentage, being able to get seats on the board of directors and drive change throughout that company. One of the most famous ones that I cover in the book as well is Engine Number One and their change of Exxon's direction. That's shifted. When I started my career at Merrill a very long time ago, trading was very expensive. Access to the markets was much more limited. Now people have access to the markets literally on their phone, in their pocket. And the ability for people to affect change in the market is exploded. So activist investing's changed along the times. It's changed based on that technology and that access. And now retail investors really do have a position to play in the activist investing market. And that's really changing the landscape, I believe, in the activist investing market.
And clearly you demonstrate that throughout the book. A stat that I found, an interesting stat that I wanted to come prepared with today. Activist investors, this according to Goldman Sachs, launched 148 campaigns against 120 US corporations last year, a 20% increase from 2021. And I thought, and we started out when you and I had this pre-talk, is like how incredible to write a book and in the Wayne Gretzky of things, to skate to where the puck is going. What was the genesis of your book? We kind of touched upon that a little bit, and I thought that was an incredible story there, because your name is also too, you work for these big tech companies, Oracle being one. You're doing a lot of tech consultation. And I thought, wow, activist investing and technology. Tell us about the genesis of the book and why you chose that as a topic.
Absolutely. So there are a couple of factors that kind of played into that. The first was I actually have an MBA in finance, and my thesis going into my MBA was really based around insider trading and activist investing. So I've had this since I really got my MBA from Ryder quite some time ago. What really drove me to write the book, because I've had this idea for a very long time, was really being inspired by my children and my mom. So I've got three young ladies that are in my family, and when I thought more and more about this great wealth transfer and how much wealth is going to transition to my children, and really taking a look at a lot of the social movements that they've seen just in their lifetime. And if you think just over the past 10 years, starting with Occupy Wall Street, going through the Women's March, Black Lives Matter, so many social movements that they were a part of, that them and their friends participated in. And you think about this activist mindset that the younger emerging wealth generation has, right? And couple that with the access to the markets, and then couple that with really what we're seeing with this large increase in activist investing campaigns, as you aptly put it. That's kind of the perfect storm. And I wanted my children to understand that you can change the way companies work. When you think about the way companies work today, whether or not, however you feel about democracies in our political environment, companies run as a democracy. The shareholders elect the board of directors. The board of directors elects the chief executive officer who executes, it's literally in the title, in the name of their title, they execute the will of the shareholders. So the shareholders hire the board as their proxy. The board hires the CEO hires the staff. If you want to change the direction of a company, change the board of directors. And today you have more access to be able to do that than ever before.
Yeah, you had used an interesting word to define your daughters, and I think you called them Uber Henrys or Ultra
Super
Henry.
Henrys.
Okay, could you talk a little bit about that? And I would love to start to layer in and ladder in the discussion of Discord servers, Reddits and subreddits, and just the convergence of how technology has, impacted this whole movement.
So when you think about it, many financial advisors would understand a Henry, right, which is a high earner, not rich yet. So think of a lot of the students that are graduating today from with maybe a STEM degree, right? They have college debt. So they're a high earner, but they're saddled with this college debt that they need to satisfy first. A super Henry is, imagine the STEM graduate that has no college debt. They're earning 3 times the average starting salary of their contemporaries, and they have no college debt to be able to stop them on their journey of financial freedom and financial independence. That's the generation, which are my children's generation, that are going to inherit a large portion of this great wealth transfer, right? When that happens, you're talking about people who have a higher earning potential than many of their contemporaries and are going to inherit a large amount of wealth. And they're activists. They have an activist mindset. So that's one of the reasons that I think financial advisors need to pay attention to what's happening, and what I write about in the book. This is happening today. So they've got to understand some of those factors. You also need to really consider the communication vehicles that they have at their disposal at this point. A lot of folks that are listening to this podcast, or maybe who would pick up the book, may not be familiar with Reddit, or you may be familiar with Reddit from Wall Street Bets and the whole GameStop thing, but you probably weren't familiar with Reddit before that. And you certainly probably are not that familiar with a Discord server. Discord servers are private servers that you can stand up and then be able to do either a direct message via texting, or you can literally talk to people live via video or audio channels within a Discord server. Discord servers are wildly popular among my children's generation. They really are very popular for gaming, for computer gaming. So a lot of folks that are either have grown up with Xboxes or PS4s or computer gaming, they're very familiar with Discord servers. The ability to communicate really effectively on a Discord server, you could stand up a Discord server today, you can invite your friends to that Discord server, you can have completely private conversations regarding that on that Discord server. People who are familiar with other social media channels like Facebook or Twitter or LinkedIn, where you have posts and you interact with posts, would find Reddit to be basically all of that goes out the window if you're using Reddit. Reddit is a huge social network. There are millions, literally tens of millions of what they call subreddits, which are individual conversations. And you post a very thought-provoking piece on Reddit, or you post something that's very creative, and then that gets either upvoted or downvoted, depending on how the conversation is supposed to go on the server. So if you're posting timely information and thoughtful information about a company, for example, if you've done an analysis of the company's financials and you have a position based on that analysis, you can post that on Reddit and very quickly, through upvotes, get a lot of like-minded people who want to hear more about that opinion. Take that now very apt group of folks, bring them over to a Discord server and start buying shares, and all of a sudden you can have a wolf pack that can launch an activist campaign that quickly.
And that power, again, what do I need for a Discord server? All I need to be able
All you
to
need is your
access
phone.
that is your phone.
Correct.
Exactly. So how are you envisioning? And by the way, we want to invite your questions, and we are giving away a $50 gift certificate to Amazon and a copy of John's book. What we do is actually we put all the people who've asked questions and we put you all in a randomizer. And then we'll notify you directly to give out the prize. So please, we invite your questions. So John, kind of back to this idea of Discord servers again, and I belong to a couple of them, right? Gary V being one of them, part of his NFT project, although I don't own his NFT project, but I think, Discord servers are part and parcel of like crypto and NFT, but we're hearing from you that that's only part of the macro ecosystem there. There's probably a subreddit and a Discord server on any kind of subject, right?
There pretty much is every kind of subject, every kind of investment that you'd be interested in is out there on Discord server. Discord servers were really, really popular with gamers long before Gary Vee knew what a Discord server was,
Yeah.
right? He's tapping into that capability at this point,
Right.
primarily because it's so easy to build a community around that, because access to it is prolific. And you can have very intimate conversations on a Discord server. You can have public servers where people can interact with you publicly, like Gary's, or you can have private servers that then you can have conversations around specific holdings, perhaps, and even in your portfolio.
So what would be your recommendation? Again, a lot of financial advisors are listening to this program right now. How do financial advisors get exposure to this new modern world of Discord servers and subreddits and activist investing?
I think the first thing is get educated as much as you can, right? There's quite a few articles that are out there around Discord servers, um, and subreddits, and just these other new communication channels that are out there that, quite frankly, many of the inheriting generation are using today. So just understanding what some of those communication capabilities are, I think, is really important. And then, quite frankly, take a look at my book. My book really does walk through this story where my heroine in the book creates a Discord server and creates an investing club and gets like-minded people, and then ultimately begins to launch an activist campaign against the company. And it's called a handbook for a reason, because it really does walk you through that step-by-step process of how do you do this and do it legally above board, but you can do this, and people are doing it today.
Yeah, I thought that was really fascinating and unexpected that you wrote this book like a parable. Like it's like who moved my cheese, right? And I think by doing that, John, you immediately brought me into the world. And I was sitting next to Eileen as she was going through like all these configurations, like even starting her own investment club. And you start out, for people who haven't read the book yet, you're starting out with Eileen's employment at GameStop. And we would be remiss if we didn't talk about if we didn't talk about and spend a little bit of time on GameStop, and again the power of the, I guess, democratization of communication channels. The last time I looked at the stock price, it was 1994 for GameStop. That was back in the latter part of January, when we researched these questions. The last time it was like at its high, it was like $81.25. What's a big like takeaway from that experience, being that, it's a focal point of the book, and, Eileen's own journey into her own activist investing.
So the book was written, the first chapter of every book is following Eileen's story as she learns about activist investing and learns about how do I do this and why is it important and how does it match my values, right? So part of that's Eileen's discovery about what her values are, and then how does she want to have her money reflect her values. The second part of every chapter is the how-to guide. And I did that specifically because if it was just a how-to guide that didn't have any kind of narrative thread to follow, it would be like a very dry textbook. So I didn't want to write another textbook. That's why I focused on that motif very specifically. What can you learn from GameStop? Her narrative really follows GameStop to just understand that the retail investor has a lot of power. That was a great example of the retail investor having a lot of power. But what you can learn from GameStop is the market can be manipulated. Let's face it, the stock market was manipulated in the GameStop with GameStop. It was manipulated through social media channels that up until that point, most financial advisors had never even heard of Wall Street Bets or Reddit
Hmm.
or a subreddit. So that really catapulted, I think, the communication vehicle to the forefront. The second is, if you looked at in the past, prior to the GameStop, call it a meme stock or whatever you'd like to call it, Prior to that activity, the sharp movements that you ever saw in the market before that were driven by hedge funds, right? And hedge funds being able to unload or buy large blocks of stock at a very short notice period. So really big market movements were primarily driven by hedge funds prior to GameStop. What's really interesting with GameStop, that massive market movement was not driven by a hedge fund. In fact, hedge funds, unfortunately, were caught in many cases on the wrong side of a short sale. That was driven by retail activist investors. Retail investors drove that stock price, as some people put it, to the moon. That is if that's not a wake-up call for what can happen with the market and the power shifting from a very select few hedge funds that can drive market movements to an extremely distributed group of people, retail investors. That's what we saw with GameStop. And I think that's what people need to take away from it. You may or may not agree with the fact that it happened. The reality of it is we're going to be talking about that particular event for the next 100 years, as far as when the market made a change from small groups of people that can make market movements to an extremely distributed group of people that can make a market move.
We've got a great question and an acronym that I couldn't wait to ask you about because we had
Okay.
touched upon it the other day when we were talking, and I loved your answer to this. This is a different question, but this is really exciting. So I'm grateful for the question here. It says follows: do you find ESG investing counterintuitive because you now are avoiding ownership in stocks that if you brought their shares, you would have had to stay in company operations and vote as an owner to be, or environmentally friendly?
I think ESG is a terrible moniker that we've created. So when you think about what's real, what are we really seeing in the market today? Like I say in the book, we're really seeing investors who want their money to reflect their values. They still want returns. They still want their investments to reflect a risk profile. There's still a time horizon for when they need the money. All of the normal tenets of sound investing remain in place. But the difference is they want their investments to reflect their values. We've tried as an industry to dumb that down to three letters called E, S, and G. So let's look at those really quickly. Environmental, social, and governance. Well, governance is not exactly the easiest thing to measure, is it? When you think across ESG, there's over 400 factors that can fall into E, S, and G. Let's take governance as a really small microcosm. Define governance for us. Is that diversity on the board of directors? Is it employee shareholders on the board of directors? Is it independence of the board of directors? Is it women represented on the board of directors? So defining governance is really difficult. And for each investor, governance is going to mean something different, right? If you're like me, who has three young ladies that are his daughters, women on a board of directors means a lot to me. I would like to see more women on boards of directors. So for me, governance for me means a lot. Like I want to see more women on the board of directors. Would I want more women on a board over independence of a board? Probably, maybe. I don't know. It depends on the company. That's where ESG breaks down and fails. We've tried to take what is truly values-based investing, not value-based investing. So we're not talking about, the Oracle of Omaha. We're talking about values-based investing. We're trying to take values-based investing and simplify it into something that's sellable to an investor. And what we found is that's a complete failure. What we're trying to do is oversimplify something that is truly deeply personal to the investor. So I think what we should be taking away from the failure of ESG is that we need to do more and more on personalizing the investing. Why are we seeing a rise in direct indexing for mass affluent families today? Why are we seeing technology try to deliver direct indexing so quickly? Because we know ESG is a failure. And we're trying to get to that hyper personalization of investing. Direct indexing is a way to get there, or at least our hypothesis as an industry is that is a way to get there. And that's why you're seeing so many technology companies invest so heavily in it, and so many large financial services firms invest in it, because we know ESG is a failure.
one of the resources that you mentioned on your book, in your book, it's on page 125. And this again was an aha moment for me, was the Barrett Values Assessment. I don't know if you want to talk about that. One of the things I liked was that $19.95 price, John. That fits within my budget. And the proceeds are going to charity, Doctors Without Borders, Period Poverty, and the Ocean Cleanup. I thought that was fascinating.
I think it's a great, it's, when you are moving into whether you're going to become, and we'll talk about the activist investor arc, wherever you're going to lie on the activist investor arc, the reason you're interested in this is because you truly do want your money to reflect your values. So the first question is, what are your values? And some people have a hard time quantifying that. So what I like with the Barrett Values Assessment is it's really focused on the value, what your individual values are. It's not looking at things like a Myers-Briggs or trying to understand your personality traits. This is really trying to get to what is the overall values that you hold dear. Once you have a solid understanding of the values, and like, by the way, like any personality test or any other test, I would encourage you, take the test and then, take a look at the results of that test and get an idea of, does this really match what my values are? At the very least, it will get you thinking. And that's what I think the purpose of any of those types of tests are, is to get you thinking about what is important to you. Once you understand that, I highly recommend, if you're working with a financial advisor, have a conversation with your financial advisor that says, these are my values. How can you help me generate a portfolio that hits my core investment profile, risk, time horizon, return proposition, but also reflects my values? And I think you'll find that your financial advisor is very open to that conversation with you, even if they haven't asked you about it yet.
The audience is just loving your answers on the ESG. We've got one more follow-up question, John, for you, and that is, are there specific ETFs and or mutual funds available now that are geared towards activist investing like there are for ESG investing? Great
There
question.
absolutely are. There are quite a few ETFs and mutual funds that are out there today. What I can do is I will actually get them to you, Tina, so that you can put them in the show notes for everyone. So
Okay.
there's different types of these ETFs that follow activist investors. There are some ETFs that follow activist investing, as, for example, they're looking for existing proxy funds, right? Those are easier to track because a lot of activist investing does happen without even a proxy fight, right? It happens with the activist investors reaching out to the existing board of directors and asking for a conversation. And in
Mm.
some cases, that conversation occurs. And in some cases, the activist investor is rebuffed, and then the activist investor will begin to launch a proxy fight, or will certainly launch a PR campaign. I'm for everyone on the podcast today. I hope all of you have seen these open letters sometimes in the Wall Street Journal, which are posted by an activist investor. Those open letters are geared 100% to gain followers to the activist investors' cause, and put additional pressure on the board of directors and the management team to come to the table and have a conversation.
So I'm going to launch our first poll around stock buybacks, and then also talk about one other question in the one other question in the chat that I really like, because apparently we have some Succession fans out there. And so the question in the poll is this: S&P 500 stock buybacks in 2021 totaled how much? It was a fact in John's book. And so we've got some answers here. So the question, oh, okay, wow. So we see it not necessarily evenly distributed, but 71%, 981.7 billion, 881.7 billion, or 781. John, what's the correct answer?
Well, for 2021, it was 881 billion. For
Mm,
2022, it was 981 billion,
great.
981.7 billion. It's a
Oh,
4.6% increase. And if you take a look at the amount of cash US companies held at the turn of this century, they held about 1.6 trillion, okay, in their corporate coffers. And today that's at 5.8 trillion. So think about, just since the turn of the century, it's been a fourfold increase in the amount of cash held in US companies today. That begs the question, why? Why are they holding on to so much cash? And is it the right of the shareholders to request some of that cash, just like Graham did, which I talk about in the book, right?
Right.
So activist investors, I believe, are going to drive that decision-making process as to should corporations hold this much cash, or should there be a distribution, a sharing of the wealth with the shareholders with the amount of cash that's out there. Icon won that with Apple. Apple today, believe it or not, distributes about $100 billion in cash out to shareholders, driven by an activist investor.
Interesting. I didn't know that. I didn't
Yes,
know that it was primarily driven from an activist investor.
yes, it was.
Interesting.
Carl Icahn drove that.
Yeah, and we were talking about how he himself as the activist investor is in the headlines today.
Yes,
Yeah,
yes.
not so good. So a research company questioned his own governance, and now he's down 50%.
And I think that's where you see some of this backlash between that ES and G, right? Just because they question his governance, until you've got a really good idea of what that governance looks like across a multitude of factors, then it will really determine whether or not that's important to a lot of the investors, or whether or not it's noise.
Yeah, so there was the cash holding discussion is something that really resonates with a few of our attendees, and we have this from Lisa Allen. She enjoyed reading the book, and she gained a lot of insights from the story. Again, we talk about the parable nature, the way that the narrative is structured. So much that she's watching Succession differently now. I would say the same thing, Lisa. The way that I look at things, the way that I read certain stories, the book has really had an impact on that. So she just got back to from a conference where she was discussing the book with a group of advisors, and it was a lively discussions. Why do you think that this is bringing up such strong feelings with people right now? And again, you've been in the industry for over 30 years. What do you attribute I'll call emotionality?
I think there is a lot of emotion built around not only just activist investing, but the change that we're seeing in the industry in itself, right? So E&Y, Ernst & Young, did a study where they polled and they published a percentage of respondents who trust different types of companies around their financial services and their wealth management. Here's some really interesting stats. Gen Z, 51% trust fintechs the most. Millennials, 49% trust fintechs the most. Gen X, 46% trust fintechs the most. Wealth management, in Gen Z, only 5%. They were behind credit unions as far as trust. Wealth managers were trusted less than the credit union in that study. Millennials, 6%, and Gen X was 8%. So if there's going to be, at this point, this great wealth transfer, we've got a real confidence gap, I think, between some of these demographic groups and the wealth management industry. And I think that does, what I'm hoping, if a wealth manager reads the book, what I'm really hoping they get from it is, how do you just start a different conversation with the inheritors of the money that you are currently stewarding so well? If they're turning to fintech firms beyond turning to a professional financial advice, we have a confidence gap and we have an education gap, because the other studies will show that investors who work with wealth managers can generate, 24% better returns on average than if you don't work with a wealth manager. So we've got an education issue where we have to educate a lot of these younger investors about the value of wealth management. And I think that's meeting them sort of where they are from a communication perspective. And hopefully that's something that can come out of the book. But I do think it's a little bit of a firestorm or a lightning
And
rod.
so certainly in today's day and age, it's easier than ever for a modern financial advisor to tap into an existing tech stack. It's not something that they have to build, but it's something rather they could just buy and integrate within their practice. A question for you about on page 54, you discuss a range of motivations that differ from person to person. Again, it kind of goes with that value-based discussion. And so among them, you mentioned diversity, inclusion, sustainability, again, a key word in today's climate change, corporate governance, biodiversity, clean energy, lobbying, transparency and accountability, worker safety, human capital management, supply chain pressures, protests and social movements, and voting rights. I think, how does an advisor understand like where their clients are in terms of that value based discussion? Like, what do you think is driving? There are a lot of factors there, and perhaps it's even an unfair question, John. I think like this is definitely in parallel with what's happening in the world. We saw with Black Lives Matter. What do you think is really driving the change?
I think that a lot of the change is really being driven by, we have a much more, my children and quite frankly, that the emerging wealth generation is, they're much more socially conscious, right? And they have protested. So they've been out there doing this. We haven't seen this kind of social consciousness really since the 60s. So if you think of a lot of the financial advisors today, we haven't seen this in a long, long time. It's been 60 years since we've seen this type of a social consciousness emerge in any of the demographic groups that we've gotten. So I think that a lot of folks today we're not prepared for it. We don't recognize it, or in some cases we scoff it. We say that it's a fad. It's not a fad. It's the way they feel, and we should understand that and be able to meet them and have a conversation around it. There are a lot of factors, and I think one of the reasons I had such an exhaustive, not an exhaustive, but a long list of factors listed in the book is, it really does drive you to this conversation that you need to speak with the generation that's going to be inheriting the wealth, and have a really solid idea of what's their values. And then you need to think, because you've got the education, you can do this as a financial advisor. You need to figure out, how do I provide them the investment vehicles that they care about and that still hit all the other fiduciary responsibilities we have. So it's getting more difficult for financial advisors, if anything else, because this is yet another factor that they need to consider when they're having conversations with clients.
And on page 162, and you had mentioned it in the beginning of the book, you had talked about this idea of the activist investor arc. And I
Yes.
thought that was great, because I see activism, and I'm sure you engineered this on purpose, as a continuum. And knowing that at different parts of my life, John, and maybe even for different companies, and for different funds, I'm going to see my role differently. I wondered if you could highlight the activist investor arc, because that made me, I could see myself in there. And I even think that Eileen, who again is the hero of the story, her own activist investor uh
Journey,
journey
if you will.
goes through exactly at different parts of her career.
Absolutely. I mean, the activist investor arc there's 6 steps to it. It starts off with a passive activist. These are investors that may be having a conversation with you today about SRI, right? Types of investing, or ESG investing, right? Socially conscious investing. So they're beginning to have a conversation. Maybe they've asked you about, hey, what do you have from an ESG portfolio perspective or an SRI portfolio perspective? Or they may approach you and say, I want to do faith-based investing, right? The Knights of Columbus have an ETF. Who would have thought that? The Knights of Columbus was known for life insurance. Now they have an ETF. Why? Because Christians may want to be gravitating towards having investments reflect that value set for them. They wouldn't have launched an ETF if they didn't think anyone was going to subscribe to it, right? So a passive activist is really looking at investments passively. Like, I'd like to be in this type of investment, but I'm not watching stuff every day. Casual activists, they may vote some proxies. It's very interesting. I did a talk at a university around the book, and someone came up to me. They actually asked the question. They came up to me afterwards, and they said, every time I get a proxy, it was a young lady. She was, every time I get a proxy, I vote the women on the board. Every time. And I'm like, you are the definition of a casual activist. You don't vote for everything, but that's something you care about. So you're voting, you're using the voice that you have as a shareholder to vote and have that voice be heard. She's a casual activist because she doesn't vote for everything, but she votes for the things that she cares the most about. Then you have an active voter. These are folks that are voting, they're researching their company, they're voting every time they get a proxy vote, right? Then you've got a beginner activist. Beginner activists are having activist discussions on perhaps a Reddit, a Reddit board or a subreddit. They're the ones that are out there. They're the ones that you see posting on Facebook and saying, this is how I feel about this company. This company did the right thing. This company was great. They're a passive activist, or they're a beginner activist. So they're active in discussions. Then you've got an influencer activist. These are the folks that are lobbying for change. These are the ones that will say, we should be boycotting a company, we should be changing the direction of a company. They're lobbying out there for a change with that company. And then finally, you have a professional activist. And when I say professional activist, this is not Orion Cohen, that's his only job. A professional activist in the definition of the book is you're out there with an investing club that you've created. You're choosing investments based on the collective values of the investing club. You're perhaps launching proxies, or you're certainly reaching out to the board of directors. You may be publishing an open letter in your local newspaper or a local business journal saying, hey, we're doing an open letter to the shareholders. By the way, if you do an open letter to the shareholders in almost any newspaper, it's going to get picked up by everybody today.
Wow.
Right? So that kind of gives you the power. You don't have to buy a Wall Street Journal full page ad to do that. You can literally do something in a local journal and have that picked up by the Associated Press. And the next thing you know, your open letter is literally everywhere in the country. And it can happen that quickly. And it's very easy to do something like that. So when you think professional activists, think of the person that's they have their regular job, but they're professionally they're practicing their activist investing with their investing club or other like-minded investors.
And you mentioned certainly through Eileen's case is that she forms her own investment club. And I looked at those websites. They were fascinating to me, Bivio and iClub. And I'm wondering how you talked a little bit about the behaviors about activist investing and how they could put leverage and how they can put pressure on the board. How are investor groups organizing themselves besides the Reddits and the Discord servers? Do you find a lot of them are using like investment club vehicles and Facebook groups even perhaps to organize themselves? Like how are they all kind of coming together?
So if you think of the Procter & Gamble, which I cover a little bit in the book, when Procter & Gamble was under attack by a professional activist investor, and the professional activist investor wanted to break the company up, right? One of the largest groups of shareholders for Procter & Gamble are ex-employees. They got together on Facebook and they basically said no to this on Facebook. When the initial vote came up, they tried to vote it down. And they wound up bringing the activist investor to a negotiating table and having a conversation around this. Also, because it was ex-employees, current employees were also up in arms about the whole thing. And the last thing you want is a strike within a plant that's processing cereal and things like that, right? So, but it did show the power of even retired Procter & Gamble employees and what they could do. There's a lot of technology that's really that's coming out right now. Overseas, there's a company called TulipShare that has a platform for activist investing. Here in the United States, Troop, right out in New York, has a platform that they've created around activist investing. And we're seeing even very large companies, think of companies that are very big in proxy, right? Here's another great example. Robinhood bought Say. Say is was a proxy voting company. Why did Robinhood buy Say? Well, because Robinhood can offer a proxy vote now right on an application, right? So instead of you getting it in the mail, over time, as they integrate that technology, they'll enable you to be able to vote proxy directly in a Robinhood application. Think of the power now that you're
huge.
continually releasing to the retail shareholder. There are large firms like Broadridge that are looking at this kind of technologies that can facilitate some of this as well. So we're seeing technology move into this that's going to help more and more for retail activist investors to come together, as well as the communication vehicles you see, like what you find today with with some of the investing clubs and the communication vehicles that I cover in the book.
We've got some juicy questions. Ready?
Outstanding.
Okay. I love this too, because again, the book is meant to be a tool and a guide, and this handbook to make it easy for advisors and those willing to dig into the topics. Here's a great question. Do you have a webinar, seminar, presentation, resources in your book or elsewhere that would help an advisor introduce this topic and engage client families, including G2 and G3? Any suggestions on doing so would be great to do, or give away your book to attendees.
So reach out to me on LinkedIn, and I'm more than happy to figure out a way to give the book away to your attendees. I think that would be great. As far as the training is concerned, I've done several webinars and master classes around this. If you go to my website, the Oasis Group website, which is www.theoasisgrp.com, you can find my webinars that are out there. And then, believe it or not, I am launching a training program, which is coming out here. It's going to get launched in June. Part of that training program is going to it's going to address some of the core things that we do with the Oasis Group, like technology selection and implementation, and go-to-market strategy for technology companies. But so the wealth management firms on how to select technology, you'll learn that in the training programs. But we're launching an entire training series around the great wealth transfer, activist investing, and what that looks like. And that'll all be hosted up on a learning platform that people can access. So
Fantastic. That's great news. And of course, we'll share that information as it comes out. And you're being thanked very, very much for that information. I think another fascinating question, and it was on my mind too. Can you comment, and thank you, Helen, for this question. Can you comment on the active investor wanting to get on the board of Envestnet and eventually got her way? Very
yes, and
interesting, a case that a lot of us in the industry can relate to.
it's a very interesting case. When the activists, so the first thing that I'm going to kind of run through my perspective on it. So please, if anyone from Envestnet's on, understand this is John's perspective after writing a book. My perspective on this was they were approached by an activist investor, and like many companies in the beginning, they did not want to come to the table with the activist investor, right? I don't know what the reasoning behind that was, but they were approached by the activist investor. They did not come to the table. And then what was the activist investor's response? An open letter to shareholders. And the open
That
letter
the
to
media
shareholders
picked up.
that the media picked up very quickly, and it was not flattering of the board of directors of Envestnet, and it was not flattering of it. It actually did address the fact that they felt rebuffed by Envestnet's
Mm,
board when they first approached them. So I think that's a really good parable, and it kind of parallels some of what I wrote about in the book. Right in the book, Eileen's group approaches a company and are very summarily rebuffed, and we see this throughout history. Even Benjamin Graham, when he first was talking to Northern Pipeline, he was rebuffed, and he wound up coming back and winning a very large windfall for himself and the other investors in redistribution of the wealth that they had in their coffers at the time. So I think what you find is when you're approached by an activist investor, the first thing you should try to understand is what's their values and why are they approaching you, right? Once you can understand that as a board, you have to respect the fact that they are shareholders, they have a voice, and quite frankly, if they amplify that voice through media, that could become a cacophony that is very difficult for you to address or even ignore. The second thing that I would say is this: with this huge rise of retail activist investing, in the past, when you were approached by an activist investor, you could get on the phone with the activist investor as a hedge fund and have a conversation with your management team and their management team to try to come to some agreement. Imagine trying to do that with 5,000 retail investors who don't have a single head that's going to have that conversation, right? It's incredibly difficult. So actually, the book's been picked up quite a bit by law firms that are interested in shareholder defense, activist shareholder
wow,
defense,
that's fascinating, John.
because it is very difficult to address that. So coming back to Envestnet really directly, I think Envestnet made a mistake with the board not engaging the activists immediately. They thought that the activists, number one, they didn't feel that the activists had a really great track record in activist investing. And I think that was mistake number one. They actually did have a pretty good track record in activist investing. Mistake number two was underestimating the power of social media and the media in general. and having that story be picked up about a publicly traded company. It will get picked up very quickly if you're a publicly traded company. If you're a private company, you have a little bit more of a runway until they pay for or get an open letter in a newspaper, and then your days are numbered very quickly. So I think that if you're dealing with this, the number one thing I would recommend is, if you're a company dealing with it, engage the activist investor, understand their motivation, understand where they're coming from, and negotiate like you would in any other hostile takeover. Which this is the approach of an activist investor. It can be the first step of a hostile takeover, which the corporate raiders made extremely famous in the 80s.
And I'll add on another one to call John O'Connell from Oasis Group and get a second opinion. We have a question around you, which I think is also too very fascinating, from Johnny. John, do you consider yourself an activist investor? And what's your earliest memory of encountering this idea?
So my earliest memory of encountering activist investors was when I did my MBA, or even a little bit before that. So I was taking a look at the Thomson Disclosure Database, if you remember what that was, the Thomson Reuters Disclosure Database, long before I did my MBA. And I actually had access to that through a local library, and I was able to take a look at the disclosure database and get a really solid idea of what insiders were making trades. And if you saw a large pattern of insider trading, it kind of gave you an idea that something was eventually going to happen with that company. Maybe not today, maybe not tomorrow, but certainly that was having access to that information, I think was really advantageous. That's my earliest memory of really taking a look at this and saying, well, if you're an activist and investor and you're kind of watching the company really well. Back then, I would have called myself an active voter, because I did vote
Mm.
the proxies that I had, and I watched the companies very, 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 very closely. But then what you wind up having children, and then things change a little bit, and you go from being an active voter to maybe a passive activist, but it's still in your DNA, right? So you may wane a little. That's why the arc is really a continuum. You may, in your younger years, you might be more of a beginner activist or even an influencer activist, and then life happens and you go down to maybe a passive or a casual activist. And then guess what? When you've got more free time on your hands, you're going to go back to being an influencer activist again, because that's your values, that's your DNA. And I think that if somebody were to take anything else away from the book really touches on values-based investing. And as an investor, why do my values matter? And that my voice as an investor matters. And I have a platform in corporate governance. I have a very deep platform that I can make my voice heard. And if people are ignoring my voice, I just need to find a bunch more people that will yell the same thing at the same time I do, and my voice is significantly more amplified. And I think if people take anything away from the book, please take away that it is a handbook for someone who wants their voice to be heard within corporate America, and it gives them a handbook on how to do that. And for wealth management firms, you need to understand that. You need to understand that trend and that direction, because these folks are going to inherit all the wealth that you're currently managing. And if you have no relationship to them and you don't know how to have a conversation with them, your days as a wealth management firm are probably not very long.
Yeah, that's huge. I want to turn our attention to another campaign that you talk about in the book, another case, and that is engine number one in ExxonMobil. And so we have a poll out right now, and the poll asks the question: did engine number one's challenge against ExxonMobil's board back in May of 2021, which aimed to push the company towards renewable energy, show the impact that in activist investing can have? In other words, was it successful? Yes, no, or does it remain to be seen? There was an article that I was reading too, John, and that talked about that, with these activist investor kind of, I'll call it little mini hostile takeovers, we obviously see a lot of volatility in the share price. And then we see things kind of coming back down to parity, maybe like 6 months or a year later. And so, how do we judge the success of an activist campaign? In the case of ExxonMobil, do you believe that it was successful, or is it, remain to be seen? Here's how our audience is voting right now. 50% actually say that it remains to be seen. And then we've got an even distribution around yes and no. Like, clearly it's pretty much almost even across the board.
So that's really interesting. I'll let everyone finish up their votes really quick, and I'll give
Yeah,
you
we've
kind of where
got
it's at.
60% remains to be seen. Again, and this is something back in 2021. A year ago. Yes, 20%, no, 20%, remains to be seen, 60%.
So that's really interesting because let's take a look at the results of that particular activist campaign. Engine number one gained 3 board of directors seats for that campaign in May of 2021. Since they won those board of directors seats, ExxonMobil has launched a new carbon capture business. They launched a brand new carbon capture venture fund. So I would argue they were wildly successful.
Hmm.
Engine number one was rebuffed by ExxonMobil. ExxonMobil would not come to the table. They launched a proxy vote, a proxy war to win the board seats. Winning 3 board seats is significant for an activist investor. And remember, when this happened in 2021, the rules of voting for the board were very different, right? So in the past, you would get either 1 or 2 slates. You would either get the incumbent slate or you'd get the activist slate. And you had to vote one or the other. You couldn't vote a couple of people here and a couple of people there. That changed. The
Wow.
SEC has changed that ruling. Now you get a slate, you get both slates, but I can pick and choose from either slate and vote the way I want to vote. So as a shareholder, I actually have more power now than when that activist campaign occurred because I can choose how I want to vote for each of the board members. So think about if you don't think that the regulatory community sees this trend as well, they do. And the reason that you can tell they see this trend is we've basically had one slate or the other for many, 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 many years. And that's now changed. And people can vote whoever they want to vote on the board. As long as they're up for a board seat, you can vote for either one of those. And keep in mind, you can still write in on boards. So you could still do a write-in on a board seat if you follow the proper protocols and what have you. But yes,
Wow. That's huge right there, what you just said. That's
yeah,
that's incredible. It ties in with our next question here for you. And we've got 6 minutes left. So if anybody wants to get in a quick question, now is the time. What trends are you seeing in activist investing? Clearly you identified one, and that is that, it's really changing the game for a lot of big companies.
I think you're going to see more and more activist investor campaigns. I even talk about in the book a little bit around the Starbucks issue, where Starbucks's board was voting to provide a significant pay increase to the CEO, which would have increased the disparity between the local barista and the CEO from a pay. Look, CEOs have a very tough job. They deserve to be paid accordingly for their job, right? But if you looked at Starbucks at the time, they were struggling with store-on-store sales, which is a big, huge bellwether for that kind of business. So there were a whole bunch of issues that the company was having at the time. And the activist investors kind of launched a campaign that said, no, we're not going to agree to this on the say no on pay. And they argued against the CEO getting the large pay raise. Now, does the board have to follow that? No. But if you're a board member of a publicly traded company, you get paid to be a board member of that publicly traded company. And you're retired. So this is a large portion of your retirement income. So like anyone else, if someone says to you, do your job or else, you're going to lose it. They have a vested interest to listening to the shareholders because they've seen these campaigns where shareholders will put up an alternative board to be able to win additional board seats and will unseat them. And they will lose that income and they will lose that position and they'll lose that prestige. So just like anyone else that is an employee, let's say it, any employee that if they are spoken to about their performance, they're going to take that to heart one way or another. And the same thing happens with a board member. If they're spoken to about their employer, that the employer is unhappy with their performance, the shareholders say they're not happy with the direction the board is taking, you would be remiss not to listen to that feedback. And I think that you're going to see that more and more. We're already seeing it. We talked about the statistics with the number of this huge 20% increase year over year in shareholder campaigns in the beginning of our discussion today. That's not going to slow down. It's going to continue to increase regardless of the economic conditions that we have or we're marching into. That shareholder activism is going to continue to increase. And retail investors, whatever you believe with GameStop, you have to believe that the market was significantly affected by individual retail shareholders who banded together and changed the direction of that particular stock and many other stocks, by the way. You know, so I think to ignore that or to scoff at it and say it's a meme stock
Mm.
thing is at your own peril. You're not reading the tea leaves about the direction that the market's actually moving in. And when you put it all together with the regulatory changes, the huge numbers of increases in shareholder activism, I think it's an overwhelming body of evidence that things are changing, and we need to react to that if we want to continue to be successful.
Is there a particular resource too that you get your news? I know that in Barron's on the weekend, there's the little snippets of activist investing. You've really inspired me, and you have, I'm in awe of just how much knowledge that you have around this subject. Naturally you have it. But for those of us that maybe it's not our main subject matter, and again, the question from the advisor wanting to make sure that they had this cutting edge knowledge, up to date knowledge for their own clients. Is there a resource or one wishing well that we can go to get a lot of this information that would, shortchange or give us a little bit more time?
There actually is not.
Oh,
Surprisingly
we can't
enough,
even ask ChatGPT.
no, there really isn't. It's surprising actually that there has not been a news source that's really emerged around this. I typically do it because I set up a lot of Google alerts to be able to alert me about companies that I follow, specific companies. You know, a lot of the companies that I'm an alma mater of, like Oracle and some of these other companies, I follow them. So, and I also follow companies that I do business with, right? So I would encourage
Mm,
you, if you are a Salesforce shareholder, you should know that Salesforce is currently in a discussion with a set of activist investors, and you should understand what's happening around that discussion, right? Um, there will be changes that will be coming in Salesforce, I think, as a result of that negotiation. So if there are companies that you find that as a wealth management firm that maybe your clients are highly concentrated in, and part of
mm.
what we do in the Oasis Group is we try to explain to advisors, you need to know what your concentration risk is. You need to look across all of the portfolios that you have, understand the underlying holdings, and then heat map that to understand your concentration risk. If you know your concentration risk, then follow some of those companies that you're highly concentrated in. And when you do see a proxy, or an activist investor campaign against that company, I would follow it quite closely. So the short answer is I read an enormous amount, um, and I have alerts that are set up for very specific things that I'm looking for around activist campaigns, around companies that I invest in, and around companies that I care about a lot.
Great, great. So, John, the best way to get in touch with you, and we had one fun poll around you. So, as you do that, I want to just launch this one poll, because that was exciting. A fun fact about John. What's the best way to get in touch with you?
So you can get me on either my author webpage, which is john-o'connell.com, or you can reach me via the Oasis Group, which is the Oasis, OASIS, GRP.com, or you can get me on LinkedIn. I'm very avid on LinkedIn. So if you send me a message on LinkedIn, I'm more than happy to email you and start a conversation. But if you have any questions coming out of today, I wrote the book because in my heart, I feel like I would like to teach people about this and help them to understand it more. I wrote the book really as a love letter to my family. They're all in it. My kids are in it. My parents are in it. My wife is in it. Um, so please, if you have an opportunity, read the book, and by all means, you can reach out to me with questions on it. I'd be more than happy to have a conversation around it.
That would be great. And you might even see the answer to the fun fact about John is that you might even see him cycling, right, John? So you
Yes.
might see him cycling on the road. John O'Connell, congratulations on the launch of the book. We're so honored that you spent time with us here and shared all of your knowledge. You made us smarter and wiser for it. Really, thank you for your time. And I want to thank our incredible audience today. Thank you for your time. We definitely acknowledge that you have a lot of choices with your time and has spent us. So we're honored that you joined us for the Intentionally and Friends Book Club. Okay, we'll be posting the replays, and thanks again for everybody. John, good luck to you. Thank you again so much.
Thank you, Tina. Have a great day.
You too.